The Reserve Bank cut the cash rate to 2% as we expected this week, but the Aussie dollar reaction was unexpected. The Aussie was sitting around 78.50 before the release, but within 2 days it had risen above 80 cents, sparked by the RBA statement. In particular, the tone of the statement, while explaining the rate cut, was rather more upbeat than expected. There was optimism around consumer spending and the job market. The statement also didn't include any particular guidance on whether interest rates might be cut again. So this encouraged a decent rally in the Aussie, but also in market interest rates beyond the cash rate and housing mortgage rates. By Thursday, the 10-year government bond rate had risen to almost 3%, certainly not what would have been expected from a rate cut. But it's hard to say how much of this was due to what was happening in Australia and how much was due to what's been going on offshore. The past week or more has seen a steep rise in interest rates all across the world, so Australia got caught up in that. The RBA is not likely to be too fussed about short-term movements in markets, particularly those beyond its control. And the Aussie dollar rally faltered once again above the 80-cent level. So when the RBA in its statement talked about an Aussie dollar decline as being likely and necessary, it still may well have its way. Westpac's view remains that the Reserve Bank cash rate will be kept at 2% for some time, probably into 2016. Indeed, we think it's firmly on hold until at least November, when the RBA will review its growth forecasts for 2016. In the week ahead, we'll see an update on wages growth, which is likely to show that wages growth is the softest since at least 1999, and indeed probably well before. This adds to the scope for the RBA to cut rates in coming months should the economy falter. The other focus, of course, in the week is the budget. Indications so far are that this budget isn't likely to hit consumer confidence nearly as hard as last year's. That might provide a little bit of comfort to the RBA in the months ahead. This all leaves the Aussie dollar reasonably well supported on dips down to about 77.5, but still capped around the 80 or 80.50 level. We'll speak to you next week.